This is the Daily Market Rundown live from the Tradelo trading floor. It's September the 3rd. Some highlights from today's show. NVDA is a key proxy market. Bitcoin is set to roll over, and US jobs data is now in focus. Good day traders and welcome. Happy Wednesday. Let's get stuck straight into it. A number of things going on overnight. Of course, we saw a little bit of a wobble in some of the long end bonds. That's since reversed now. They're posting a little bit positive on the day, but there is one key standout. That is, of course, Japanese 30-year bond yields. We'll talk about that because they are now sitting at yield levels not seen since pre-2000. Okay, is it problematic? Isn't it problematic? We spoke about this yesterday. At face value, no, of course not. It's not problematic right now. But should we start to see those spill over into perhaps the 10-year part of the curve, the 5-year part of the curve because of some forced selling? Of course, that will have implications, and we'll discuss that in a moment. But with that in mind, let's get across and talk about our first topic of today. And it's all got to do with ultimately what's going on in the equity space, the technicals around the equity space, this idea of September being a weaker month for equity markets. And then, of course, the consensus thinking on Wall Street, which is September is going to be a weak month for equities. We're going to see some form of a correction, but that is then going to be the end of it. It will be the ultimate dip buy opportunity into year end. Okay, that's the general thinking. Everyone right now on the street is thinking the same thing, which is real yields are coming off because the Fed has signaled rate cuts that are incoming, not just rate cuts, but more aggressive rate cuts. At the same time, of course, earnings are holding up really, really well. And so everyone is just waiting for that 5%, 10% correction so that they can join the rally. That's consensus thinking right now on Wall Street. And that's also why the VIX is really struggling. Every time it does spike up, it gets faded relatively fast. Okay. A number of things to pay attention to. I think, first of all, we do know that the Trump-Lisa Cook thing is ongoing. Now, just very, very important, if we look at some of the general thinking around this, in terms of a risk event, the market is not concerned about this at all. Why? Well, because what we need to understand is that in the United States of America, you are innocent until proven guilty. Lisa Cook has not been proven guilty, and therefore no one actually thinks that she will get fired. Okay, everything points towards this idea that she will be will be given her day in court, where she can represent herself, represent her case, and we will go down the judiciary route. The point is that right now the market is not pricing this in as a risk that she does get fired. Okay. However, that being said, if for whatever reason that we do get a ruling against her, and Trump's firing is upheld, that will be significant for the market simply because it's not pricing it in yet. Okay. Coupled with that, ultimately, we can see that the VIX right now for the month of September is trading historically low. Okay. September is historically a bad month for equities. It is historically a month where VIX is somewhat higher than the average, and we know the average for the last sort of 6 to 8 weeks has been somewhere around 16 and a half. Okay, so the point is that VIX should be higher than where it is right now, or it should be elevated relative to where it's been the last couple of weeks. Okay, with that in mind, we also did get the ISM data out yesterday. It was a touch on the softer side, in the sense of we saw a downtick from the previous month. At the same time, we saw prices paid ultimately drop, and at the same time, we also saw the employment part of it tick down. And I think that was the most interesting one, given that, of course, the Fed is very, very aware of labor market weakness. And so, again, ultimately what that points to is just this continuing weakness in the labor market. Now, very, very important to mention that today is going to be perhaps even more important than non-farm payrolls on Friday, given we have got the JOLTS data, or maybe not more important, but equally important. Okay, we'll discuss the JOLTS in a moment. Right now, of course, we also, like I mentioned, European yields, US yields, we did see a little bit of a move. We did take out yesterday's lows in terms of gilts, in terms of US 30-year, but they have since retraced. Okay, so keep an eye on those yields. Like I said, it is one of those things that doesn't really matter right now, but at some point, of course, it could matter. A few more things to pay attention to before we get on to some of the charts. I think very much yesterday, the S&P 500 tested the 50-day moving average, bounced very aggressively. Why am I mentioning that? Well, because clearly the 50-day average is going to provide a dip buying opportunity for someone. Okay, now that doesn't mean it doesn't go below it. It just means someone was quite happy to buy that 50-day moving average, and if they go another 5% offside, that's okay for them based on what they're trying to do. Okay, but we got a very aggressive reversal on that 50-day average yesterday, so don't be surprised to see that 50-day moving average in the S&P play a role as more support, play a role as potentially a bit of a washout trade below it, and then more support later on. Okay, keep an eye on the 50-day moving average. I suspect it's something that quite a number of institutional players will be looking at to of course, get on with a dip buy. Okay. In terms of then Bitcoin, we'll talk about that in a moment, but we do need to keep in mind because there is a very good technical pattern in Bitcoin. It looks very bearish near term. And the reason I want you to pay attention to Bitcoin is simply because Bitcoin has been the big underperformer relative to Ethereum, of course, for the last couple of weeks, but also it's been underperforming equities in general. Okay, so it's weak. Think of it, if it was a stock, we would look at it and say, when stocks go down, sell Bitcoin because it's the weak one. Okay. Now, why that matters is because technically we're posting a bearish pattern. But equally, if we think there's going to be softness in the month of September, if we think VIX is going to be elevated in the month of September, the reality is that Bitcoin should lead to the downside. In other words, we've got some really good, decent downside opportunities in the near term. Does that mean Bitcoin's going to collapse? Absolutely not. Does it mean Bitcoin might go to record highs later on this year? Absolutely could do. But right now, near term, month of September, we don't want to be long Bitcoin. We want to be defensive, particularly because we have now got a bearish pattern in play, which we'll talk about in a moment. And then finally, of course, like I said, the general consensus on Wall Street is for a correction in September. It's important you know that everyone is waiting for a correction in September. Will we get it? Won't we get it? I don't know. But I know everyone's expecting it. Okay, so we've got to keep a very close eye. If everyone's expecting it, it means that perhaps the correction will be quite shallow in nature. And again, if we go and have a look at the chart, this is probably a good segue onto it. But this is the S&P 500. In purple, you of course have the line chart. And then light blue, we've got the 20-day average, 50-day average, 100-day average, 200-day average. Okay, the reason we look at it this way is it just helps us understand trend. Okay, it's a very good way to look at price relative to trend. Now, what's important, like I said yesterday, we tested that moving day, that 50-day moving average, and bounced very aggressively. Okay, it was quite a significant, well, we tested close to it, not exactly. Okay, my point is that the 50-day moving average, I suspect, is going to play a pivotal role. What I want to point out in terms of this line chart, okay, is notice what we're seeing here. Horribly drawn, but something along those lines. Okay, we are effectively channeling. Now again, how deep this correction will be, well, do we get back below that previous record high? I doubt it. Okay, if we were to get back to that previous record high, I mean, that's a good 220 points lower. I suspect we will see, I mean, that's almost a 5% move. I suspect we will see a number of participants stepping in very aggressively there. Okay, so keep an eye on that. That is perhaps a level. But then, like I said, just keep an eye on this channel and how it plays out. Okay, very much how these channels work out, particularly as they thin out towards the top, is we traditionally will sit inside of it, we'll get the snap, and then we'll get the snap, and once we re-enter, we then trade it back to the upside. Okay, that's how I would be looking at this as a day trader. Ultimately, there's a lot to be seen still with this pattern, but keep an eye on that. I think that trend channel is going to pay dividends. Okay, then as I said in the video, I think it's a very important one to watch. It is the momentum stock. It is the one that's been driving this entire rally to the upside. That, of course, and the Mag 7. But in general, NVIDIA is a great proxy. Okay, where NVIDIA goes, the equities go. That's how it works. Now we have come back down to that 170 level. We can see that once, twice, three times it's been bought very aggressively. Okay, bought very aggressively on a dip, rallied back up to record highs. Bought very aggressively on a dip, rallied back up to record highs. This time, okay, still closed relatively strong yesterday. I think it was bought up very aggressive for 170. So I think 170 is key. Today, tomorrow, next week, this month, $170 is key. If this correction is going to continue, I suspect we are going to break down below 170. So it's a case of the moment NVIDIA crosses that threshold, closes below 170, we're probably going to see a continuation of the correction. Why does it matter? Well, look, if I want to be short, ultimately I want to see some markets sustaining and showing me that weakness, okay? Because then ultimately it gives me somewhat of an edge. So keep an eye on that. I think NVIDIA 170 is a very, very important price point to pay attention to. Today, tomorrow, this week, this month. Okay. In terms of then Bitcoin, I think the pattern is glaringly obvious. If I just scratch out that name for a minute, assume you didn't know it was Bitcoin. Okay. The way we would look at this is there we had a double top. We extended the double top, and effectively we just created a massive resistance. Okay. Whatever that price is, call it 108,000. So 108 to 110,000 has proven to be massive resistance all year since December. Okay. We finally accelerated. If you look at this little green section here, we finally accelerated. In fact, let me make this a little bit neater for you. Okay, so we finally accelerated and effectively, but effectively locked in a number of positions starting there and ending there. Okay, so we had from 108,000 up to 124,000, we had fresh longs entering the market, fresh money entering the market. Okay, now that money has not yet been liquidated. It's still on sides. Okay, yes, we had a pullback, perhaps some more money was added there. The reality is that that positioning that started in July has not yet been liquidated. Okay, we know there was quite a bit of CT activity as well that took place on that breakout. We know there was quite a bit of volume that came into the market. The point is that positioning is still sitting at 108,000 and it's not yet come unstuck. Okay, now what's happened? We broke above, we came back. We broke above, we came back. We can see resistance turns to support. We then have now started to lean on resistance as previous resistance. Okay, this is as clean as it gets in terms of technicals. We're now testing it again today around that 112 area. Okay, the point is, the longer we sit below this 112, the more days we close below 112, at some point that 108 gets tested. And like I said, below 108, you're getting a liquidation move. Okay, it'll start slow, it'll pick up speed because all of these positions are going to come unstuck, they'll be underwater. Keep a close eye on that. 112, so long as we close below that, this market is vulnerable to the downside. Below 108, you're going to see a flush out. Where do we go? I don't know. I don't think that really matters. What I do know is that we will get a little bit of a fast money move. Perhaps we drop 2%, 5%, 10%. I don't know. The point is, I want to be aggressive, looking for that flush out, taking out some of those big longs that established themselves back in July. All right, that's the Bitcoin thesis. Now, in terms of course, what's going on, like I said, there's Japan. It's the only one down today. And I've written this sort of relative calm. Yes, there's relative calm right now. I think so long as see these yields sort of move sideways, I don't think that's necessarily going to impact the markets. But that relative calm will end at some point. What ends it? Okay, there is the Japanese yields in orange, as you can see, as far back as I can go in 2000. We are pretty much trading above those levels. So is that problematic? Is a 330 yield in Japan at 30 years problematic? No, of course not, because the JGB owns the entire bond market. And at the moment, every central bank or every federal treasury department around the world is not issuing long dated debt. Okay. Where does this become a problem? Where is this going to be an issue where I'm going to go, oh, okay, now I want to get interested? Well, if we were to come in tomorrow and Japanese 30-year yields were up, say, 15 basis points, that's a different story. Why? Because that's forced liquidation. That's now big players, institutional players that are going, oh shit, we need to sell out of these bond positions. Okay? If that happens, that's got spillover effects. So they sell the bonds, they've got to do something else. They've got to liquidate something else. That forces someone else to liquidate and do something else. Okay? So it's when we get that spillover effect and that forced selling, that will spill over into the markets. That will create risk off. That will take gilts with it. That will take the pound down the page. That will put the gold at record highs. That will put the equities down the page. That's how you have to see this. Okay, it's a rate of change thing, not an absolute level. Okay, just remember that. And then in terms of course today, it is JOLTS data. JOLTS is important. Like I said, it's going to be effectively a preemptive read on the NFP on Friday. Now, the expectation going into Friday is that we're probably going to get a soft print. Okay, the hedging that will take place is that we're going to get a soft print. That's how the market will lay itself up. That's currently how it's laying itself up, which is there's a little bit of hedging against a weak print. Okay. However, why is there not a lot of hedging? Well, think about it. If it's a weak print, what's going to happen? The Fed's definitely going to cut in September, and they're probably going to cut more than 25. That's why we're not seeing a VIX at 19. That's why the VIX got faded, because the reality is that a bad number just opens the door to more aggressive cuts from the Fed. Okay, and that's why the market kind of just not too concerned about it. So for today, you have to play it with that same sort of mindset, which is a weak number. What's a weak number? Something less than 7 million. How's the market going to react? You'll probably see the equities initially offer and then get bought back up. Okay, you'll probably see the dollar initially weaken and then get faded. You'll probably see gold initially go and make a record high and then fade. Okay, the point is that a weak number today only adds to the likelihood, which is pretty much almost near certain, that we're going to get a cut in September. Okay. What about a good number? Let's say we got, I don't know, something above the expectation. In terms of expectation, 7.4 with a top end of, call it 7.8. So what happens if we did get something around, let's say, 8 million? Okay, what does that do? Well, does that change the dynamic? Does that mean the Fed's not going to cut rates in September? Absolutely not. Okay, if anything, it's music to the equities ears. It's very much sort of a Goldilocks scenario where, hey, the economy actually is holding up really well and they're just about to start cutting and giving us that little bit more momentum that we need. Okay, so good data is good for equities. Bad data, it depends on how bad, and we'll of course talk a lot about this when we get to the non-farms, but it has to be really, really bad, like stinky bad, to cause some form of an equity sell-off, simply because then we have more fears of recession. Okay, that's how you have to think about things going forward. If the data is generally soft, it points more towards a soft landing, which is not bad for equities because the Fed can cut and ultimately solve the problem. If it's really bad data, it increases the odds of a recession. Okay, so what's really bad data today? Well, you get less than 6.5 million JOLTS opening. Yeah, that's going to create a little bit of interest. That's going to cause a little bit of concern. That's going to put an offer in the dollar, a bit in gold, and of course, an offer back in the equities. Okay, with that in mind, like I said, we have been very range bound between 7.1 and 7.5 since the middle of this year, but we can see that trend is firming to the downside. Okay, keep an eye on that. Definitely want to pay very close attention to over the trading session. All right, with that in mind, as per always, for those of you that are members of the Discord channel, please do comment. If there are any questions, you are welcome to ask those questions. For those of you that are not yet part of the Tradelo community, don't worry, we will be launching the new application within the next couple of weeks, at which point you can then, of course, join us all in the Discord community. Otherwise, for the rest of you, do not forget, of course, to like and subscribe to the channel and post your comments. Otherwise, good luck out there. Go manage the risk. Go make some money.